Welcome to the Jack and Joe Show. We talk about property, business, and everything in between. Hosted by Jack Heskin-Taylor and Joe McCarthy. Sharing the stories of entrepreneurs, property investors, and our journey to health, wealth, and happiness.
Welcome to another episode of the Jack and Joe Show. We're down in Birmingham today with the lovely Sue Sims. Hi, Sue.
Hi, good to see you.
Good to see you.
Today we're going to be basically going into Sue's background, how she got to where she is today and what she's doing at the moment, and try and get some tips for anyone like ourselves if you're getting started in the property industry, especially HMOs. You do social housing as well?
Yeah, we do.
Yeah.
So I've been involved with HMOs, social housing and buy-to-let, so across the board really, and that's with my business and personally. So I've got a portfolio of more than 40 properties, and just really for my own peace of mind, I've been quite diverse with what we've done with that. So we've got some 2 and 3 bedroom houses, I've got some 2 bedroom flats. They're just like standard rented out to families or professional couples. Then I've got some houses which are leased for social housing, I've got an HMO, and I've got some serviced accommodation apartments. So there's a real spread of what we do.
Yeah, very diverse. No, that's good. So can you tell us a little bit about your background and how you even got started in property in the first place?
Yeah, I was really fortunate. So I started in property more than 30 years ago because my dad, I just think he was a really, really forward-thinking man, and Dad's always got loads of big ideas about stuff. He's brilliant. So he was a student landlord back in the 70s and 80s, before there was buy-to-let mortgages, before there was interest only, probably before you were born. And so Dad had a few student properties, and then when I was 21, he found, actually, this is the building.
Oh, wow.
Yeah. So Dad found this, which is the shop downstairs, the flat above it, and he just said, look, I think that'd be a really good investment for you.
Wow.
And he suggested that I go to talk to his bank manager, and his bank manager was great, and he said, yep, that's fine, we will loan you the money, but I want your dad to be your guarantor.
Yeah.
Which I didn't want. If I was going to do this, I wanted to be able to do it under my own steam. So I had to go and find a bank manager, and it's at like 21, it was like, oh, okay, how do I do this? So I banked at the time with Midland Bank, went in to see the bank manager, and I'm sure probably had all of those feelings that everybody has when you've got to go and make a presentation, and you feel nervous, you feel anxious, you're concerned. I had all of those feelings, definitely. But anyway, went to see, I remember his name now, Mike Finn, and went through everything, and luckily he said yes, they would lend us the money, or lend me the money. So that was, more than 30 years ago. I think we paid £18,000.
That's for this property.
That's for this property that you're in now.
Okay.
Yeah. So I had a 10-year mortgage, and literally then it was paid off at the end of 10 years. We put this property then, it went into myself and my sister invest together with mum and dad. So it became what we called Sims and Daughters.
Okay,
And that was literally then when we started. So Dad had always been involved with property, but then when he decided that he had basically got too old, he was fed up of managing the properties, gave me an option, say either do you want us to keep them and you can manage them, or are we just going to sell them? And I was in a situation then that I was full-time in recruitment, so I was working 50, 60 hours a week, making really good money, so I just didn't have the time then to be able to manage their properties. So mum and dad sold them and put the money into stocks and shares, as you do, because they wanted to still get a return. Yeah. And then the market crashed in 2008. No. So lost a chunk, and Dad was like, okay, fine, what are we going to do? Took the money back that was left. Yeah. And started reinvesting in property all over again. So it's like really cyclical. Yeah. And so at the same time then, my sister and I decided we were going to get more involved. So Paula and I from 2008 have grown our portfolio significantly. We own between us, I think, 24, 25 properties. Sorry, that sounds dreadful that I don't know the exact numbers.
When you started and after the stock market crash, did you all pull money together? Did you just buy a limited company, or did everyone just do their own?
Right,
sort of thing?
yeah, with all of the properties that I own, so as well as what I own with my sister, I also own properties with one of my best friends. Okay. He and I have put together money, and we've got 6 properties,
Nice.
and then I own some with another friend as well. So I've always invested jointly.
Oh, okay. Interesting.
Before I even know that was a
That's
joint
what it was,
venture.
Yeah.
For me, that was what we did. So I invested with my sister, I invested with one of my friends, and actually I still own a property with an ex-partner as well. But that's another. But you know, it was an amicable split, so there was no reason that we had to then sell the property because it just didn't make sense. So coming back to your question, how did we do it? The money that Mum and Dad had was enough to buy one flat, which was quite run down, and we refurbed it. Mum and Dad were going to use that then, that if they decided to downsize, that was going to be where they were going to go and live.
Yeah.
But Dad hated the fact that it was leasehold, that we were paying service charges, and that it just literally was just hitting the bottom line.
Yeah.
So because we were really fortunate at that particular time because of the market forces, we sold that property for double what we bought it for.
Really? Yeah.
So
Wow.
so we bought it for 80, sold it, I think it was for like 152.
Lovely.
And that then was what has given us the pot, which we've used literally then for me and my sister to grow that as a family business.
Okay.
Excellent. So continuing on from there, so you had that pot of money to work with. What was your primary strategy after having that pot? Would it be single lets, HMOs?
Yeah, just really simple.
Yeah.
Yeah.
And there is nothing wrong with slow and steady
Yeah.
and what I call like old-fashioned investing.
Yeah.
So we use that pot to put down as a deposit, to pay for refurb. We'll then sit on the properties for a couple of years, refinance, and then go again.
Yeah.
Okay.
And yeah, obviously, over that time, I accrued additional income from my job. So did my sister. So there was additional money that we could put in to grow what we were doing. It's only really been in probably the last 3 or 4 years that I started going to network meetings and realised, oh, there's lots of other things you can do in property. It's not just buy to let. And that's because up until that point, that's what I'd always done.
Yeah.
So with the friends that I invest with, we'd always just done single lets because didn't know there was anything else to do.
Yeah.
Didn't really even know very much about HMOs at that stage, and I probably would have thought, what on earth do you want to have an HMO for? You've just got more tenants to manage. But anyway, it opened my eyes
Yeah.
that there's so many more things that you can do, and that's why my own portfolio now is so much more diverse than it just being single and straightforward buy-to-lets.
Okay. When you went networking, what was the first thing you did when you learned about all them new strategies?
What did we do? I looked at, one of the properties that I would normally have used just as a straightforward buy-to-let,
Yeah.
we converted into a 5-bed, 2-bathroom HMO.
Ah, okay. Okay. Did that go well?
Yeah, I still own it.
Yeah.
We've not remortgaged it. It is due to be remortgaged, but yeah, it just ticks along.
Okay.
Yeah, so
perfect.
quite happy with that really.
And so what are your plans now going forward in your business? Any kind of main strategy? We know you have the agency.
Yeah, so I've got my HMO management agent, but if I look at sort of like what I personally am doing in property,
Yeah.
I'm quite happy to put my hand up and say I've run out of money.
Yeah.
So I haven't bought anything personally for the last 12 months because I've got to that stage of what do we do? And what we will do is to refinance. I know that I've got equity sitting in my properties.
Yeah.
However, I do quite like having a relatively conservative loan to value.
Yeah. Interesting. Yeah.
Yeah, so I think we're probably sitting somewhere around about 60-65% loan to
Really?
value.
Yeah. Wow. We
Yeah.
met somebody yesterday who was talking to us about sort of old school landlords that are keeping quite a lot of equity
Yeah.
in their properties,
Super.
whereas newer people are leveraging to the
Yeah.
max. And
Yeah, and I think that buy, refurb, refinance is tough.
Yeah.
It is really, really tough, and this is why I get really frustrated by all the flipping training courses that are out there that are selling you no money down, money in, money out.
Yeah.
How many times does it actually work?
Yeah.
I think it's
Very
more
rarely.
likely to work the further north you go
Yes. Yeah.
because the properties are so much cheaper.
Mhm.
Birmingham is a really, really hot market.
Yeah.
So it's almost impossible to be able to do here. And so so there's people out there that are paying so much money for training courses, being taught strategies that don't work.
Yeah, sold the dream, aren't they? That's it. Literally being sold the dream.
Yeah, and that
It's
does just make me a bit frustrated, and I do sort of like probably go on about it a bit. But anyway, I think so. I'm quite happy to put my hands up and say, look, go and do loads and loads of research before you pay any money for training,
Yeah, yeah.
and really, really, really make sure that what you're paying for you're going to get what you want.
Yeah, we found that. Now, when I first started off my journey, a lot of my education was just through books, networking and podcasts.
Absolutely brilliant. And I said that yesterday or the day before when I was talking about rent to rent, and I was saying to people, before you go on in courses, read books, listen to podcasts, go to networking meetings, talk to people, ask questions in Facebook groups. That's practically all a free resource. Your network meeting might cost you 20-25 quid.
Yeah.
True.
But it's nothing in the overall scheme of things from what you can learn before you're going to go and pay like thousands for property education. So I think we're really in agreement.
Yeah, definitely. I mean, like, we've learned so much just going to networking events in our local area, speaking with people that are physically doing what we want to do, that have gone through it, and we'll call a spade, won't fluff any numbers. They're not trying to sell us on anything. They're just basically telling us as it is, helping us.
And that, I think, is it always surprises me, and I think people who are new coming into property always seem to be really surprised at how generous people are that are already working in property.
That's for sure.
Because I think most people will give you time. As long as you're not taking the mickey. And I know that I got to a stage, and when I had a business coach about 3 years ago, he was like, you have got to stop having coffee meetings, because all that is happening is people are sucking your energy, taking your time, and you're not getting anything back from it. He said, so you've got to start charging for your time. And I do charge now, and I do charge sensible prices, which might be a little bit more than a cup of coffee. But what it did get rid of was all the time wasters. It got rid of all of those people who would want to come and have coffee with me, listen to what I'd got to say to them, and then in 12 months, they'd still not taken any action.
Interesting.
But I think if somebody's paid me, they're far more likely to listen to what I've had to say, come up with an action plan and take action. Because they've put some money into it.
So say if I'm a person now and I'm coming to you for, say, like a sit down and coffee, a bit of education, what sort of things would you go through?
Right, it would be tailored to what you want. And we would work out what you actually want to achieve out of that meeting. So you will walk away with an action plan, and it might be that you come to me to say, so I really don't know how to work out what area I want to invest in. I don't know what business model is going to be best for me. And it's then just taking that all down into the nuts and bolts. And that will just be the simple things, like before you go and view property. Right, so people who work with me as a coach think I'm the most boring coach in the world because I'm the person that's going to say to them, do not go and view property. I don't want you to do that until you've spoken to a mortgage broker, you've spoken to an accountant, you understand where you want to invest, you've made some phone calls, you've done some research, and you've actually nailed down what you need to be doing.
And where you're going to do it.
Rather than, great, go and do the exciting stuff, go and view the properties, but actually, that's a waste of time if you haven't done all the background stuff that you need to do first. But this is the stuff that people aren't taught. When they've gone on the training courses, they're taught all the big picture stuff, and it's great, you can go out and you can do this, but actually, let's just take it back a few steps and let's just get all the, what I call the nuts and bolts in place first.
Yeah, definitely setting the right foundations in place, really, isn't it?
It's got to be. It's a business. It's a property business. What other business would you go into without sorting out all of that foundation first? But it just seems that people don't recognise that investing in property is a business.
Yeah, definitely. And speaking about business, because we've started in service accommodation, and we know that you have some units of your own as well. So what are your thoughts on service accommodation? And as you said, business, it is physically a hospitality business as opposed to property investing, so to speak.
Okay, service accommodation, in my view, is hospitality. It's not property. It's got nothing to do with property, except for the fact that you actually have a building that you're running it from. That's property. And people that come to me that say that they want to do serviced accommodation, I would probably ask two questions. One, has it been your ambition to have a guest house or a B&B? And if that hasn't been your ambition, why do you want to do serviced accommodation? Because serviced accommodation at the end of the day is exactly the same as running a B&B or a guest house, except you don't cook their food and you don't give them breakfast. It's no different.
Yeah, it is very work intensive for sure, you know, and it's like we spoke about before we started recording this, you know, when the boiler goes at 7 p.m. on a Saturday evening, who are they going to phone, you know, and if you're starting off, you don't have a management team in place to do this, and you know, you don't have the capital to employ and hire an area manager. So you have to physically do all these things yourself, isn't
Absolutely.
it?
But even when, so I outsource everything with mine, and I've got an absolutely fantastic company that manage all my properties, and that's all they do. Their business, they've got the husband and wife who are the directors, have got about 10 members of staff that work for them. So they're not scrimping in terms of what they're doing. But in exactly that situation, when a heater goes, they still ring me to say, the heater's gone. What do you want us to do? They are very sort of like, they'll always come to us with a resolution, which will always be, do you want us to sort it out and replace it, or do you want to use your own contractors?
Okay.
So even though I've outsourced everything, I've still got to have input.
Yeah, it's not completely hands off, is it?
No. And I think it's really a lot more difficult to be completely hands-off in serviced accommodation rather than HMOs. So we manage HMOs and we manage sort of like buy-to-lets. I think those can be much more hands-off.
Yeah. Can you take us back to so when you started investing initially, and then you developed and you started to produce like you know, a lot of income, and started kind of pooling that money up together because you had to work at the same time and then invest in that money. When was the transition point to go from there into HMO management, and what was that like?
Right, okay, so let's just try and think when I started doing this. So whilst I was building my portfolio in the 90s and the early part of 2000s, so like the 2000s, I was still working in recruitment. So I was earning good money, and that was great because we could just put that straight back into the property business. I closed a recruitment company with one of my business partners about 2002, and went through sort of like quite a long period of time then where I was doing all sorts of different stuff. Literally, I was properly self-employed, doing lots of different things with whatever I needed to do to earn money, pay the bills, pay my mortgage, all that sort of stuff, because we've never taken money out of the property businesses.
Okay.
That's always just been reinvested, because the property has always, in my view, has always been for pension and for the long term. And I think my dad got a bit fed up of not being able to say to people, what's your daughter do? So he started talking to the letting agent who I used to let my own properties, who was a one-man band. And Dad had said to him, look, you know Sue's really good at sales, why don't you get her on board and grow your business? So we started working together. Within less than 12 months, took that to the situation where he had to go VAT registered because we grew the business a lot. But then there were a lot of broken promises. So I set up my own lettings agency back in 2015. And that was just doing standard buy-to-lets, and it was really when I was only just starting to learn about HMOs. Then I had a few landlords who came to me to manage their HMOs, and through the networking that I'd done, met up with the two guys that are directors now in Genie Rooms with me.
Okay.
And that was when we set up Genie Rooms in September 2017.
Okay, very good.
And the emphasis was always going to be on HMO management, but I think that you've got to be able to adapt to business as well. So we also manage just straightforward single buy-to-lets, and I've been involved in social housing for about the last 3 or 4 years, because I knew it was quite good. That it was an HMO because you've got 4 or 5 people living in the property, but I get paid as if it was a buy-to-let. So for me, that was just like brilliant. I pay no bills, I have no voids, and I get paid rent every month. Brilliant.
So is that for social housing?
That's for social housing,
so how did that come about? Like, what first got you interested in that, or how did it start?
A total utter fluke.
Really, yeah.
Because I was working in a lettings business,
Yeah.
and we were advertising other people's HMOs that were student properties, and we'd missed the student market with some of them because the landlord brought them to market too late. a director from one of the housing associations that we work with approached me to say, would that landlord be prepared to lease his property to us for us to use for our clients?
Really, yeah.
And once we'd done that 2 or 3 times, we could see that it was working with other landlords. I then thought, right, okay, I'll now look at trying it with some of my own property. So did it for my own property. And then when we know that that model is working properly and we've gone through a cycle, about 2 years ago, we started offering it out then as a solution for other investors.
Could you break it down for us on how it works? Do they just give you a fixed rent and then
It's
and
brilliant.
then they rent the rooms out essentially?
So for example, in Birmingham, if I had one of my 3-bedroom family homes, probably rent out in Birmingham for about between £650 and £750.
Yeah.
Converting that into a 4-bedroom HMO means that we will then get a guaranteed rent of £11.25 a month.
Okay.
So that as a 4-bedroom HMO, what I would call like a standard HMO,
Yeah.
where you're going to have 4 individual working people living there, I think is really difficult to hit consistent profit.
Yeah.
Because I always think with like a 4-bed HMO, your first 3 rooms cover all the bills and the mortgage. Room number 4 covers the voids, and it's only when you get to room 5 that you get profit.
Okay.
But leasing that property to a social housing provider means 1, I don't pay any bills, 2, I don't get any voids,
Yeah.
and I get a guaranteed rent every single month, regardless of how many people they've got living there.
Nice.
So they are taking all of that risk, and they will pay full rent from day one.
Yeah, and the bills included is massive as well.
Oh,
isn't
it's
it?
huge. Yeah, it's so that's why it just works.
And do you get the rent what you would if you were to let it out as a single let? Do you get
No.
the same, or is it?
No, if I let the property as a single let, I'd probably get between sort of £650 to £750.
Yeah.
Paying the additional money to make the house into an HMO and make
Yeah.
it HMO compliant, we get £11.25 a month.
Yeah.
So there's a significant increase.
Yeah. So is that what the social housing give you?
Yeah.
Really? Yeah.
Yeah.
125.
Yeah.
Wow.
So the property that we're probably using, and with the investors that we're working with, that we're working this model, they are probably going to buy a property that will be between 120 to 130 in Birmingham.
Okay.
Conversion cost is going to be about 15 to 18,000.
Yeah.
So again, your conversion cost is so much less than a standard HMO for working people.
Yeah. Okay.
Because in Birmingham, the HMO market now is, there's certain areas that are really saturated, but I would still say that to achieve premium rents, you've got to go very high end.
Oh yeah. Yeah.
You've got to go 6 bedrooms, all en suite,
Yeah.
to really get the returns that you want. And then you've still got the issue that you can have voids, because there's always going to be a period where you're not going to have 6 people for 52 weeks in the year.
Yeah.
Yeah.
You've got the uncertainty with how much your bills are going to cost. So for me, it's just, and that conversion cost is probably going to be 60 or 70,000
Yeah. Yeah.
versus my nice little house for social housing that's going to cost 15 to 18,000.
Is there still like certain regulations you've got to meet for that?
HMO, everything, it's got to be HMO compliant. So
HMO,
all your
okay.
fire doors,
Yeah.
your interlinked smoke detectors, your emergency lighting.
Okay.
They go a little bit further because they want window restrictors on upstairs windows. They want
Okay.
CCTV cameras covering communal areas.
So a couple of extra things.
A couple of extra things, yeah. Fully furnished,
Yeah.
carpeted, blinds all the way through, all the usual sorts of stuff.
Okay.
Perfect. And so what would be some of the biggest challenges you found now in the HMO management? What would be kind of
People.
People.
Tenants.
So breaking that down. So breaking it down, say if you're vetting a tenant, how would you vet your tenants prior to letting them have the room?
Okay, so I suppose there's 2 ways. All of the tenants, obviously, one of my lettings team will have met them at the property.
Okay.
So we'll have spoken to them on the phone first. And so we'll make sure that they're in a job. We'll talk to them about when they're looking to move in. We make sure that they're just looking for a room just for themselves, because
Yeah.
you'd be surprised the number of people that ring up and go, oh, I'm interested in that room. Yeah, who's going to be living there? Oh, my wife and my 2-year-old. Okay, well, probably that's not the best for you then, and it's going to breach all the HMO requirements anyway.
Yeah.
So we'll do those sort of like standard questions to begin with, so that we're not wasting time going and doing viewings.
Yeah.
Then we meet the people at the property, meet the person to actually decide, right, are they going to fit into the house?
Yeah.
And then, if we feel that they're going to be a good fit, they'll pay their holding deposit, and then we'll get them into referencing. We use a third-party referencing company.
Okay.
So they'll do then all the landlord reference, the work reference, the credit check, the right to rent check, all of the stuff that we need to have in place.
Okay.
So it just gives us that backup as well.
Yeah.
And then when we've got that as a pass, we'll then run it past the landlord, the investor, say, right, this is the person that we've got who wants to move into the property. Are you happy to go ahead with it?
Perfect. And so you're doing the refurb now into a HMO. Would you start advertising that room to rent even before the refurb was done? We've heard some people do it.
Yeah, right, okay. I don't actually know how often that works.
Yeah.
It's a very,
in my experience.
timing is like probably such a small window there.
And I'm such a cynical person. When I see these posts on Facebook where people say, oh, I haven't even finished my refurb yet, but I've let all 6 rooms. Really? Have they? Or again, is this like Facebook myth? Because you can say what you like on Facebook and anybody's going to believe what you say.
Yeah.
Because Facebook is the truth, isn't it?
But that's it, like even saying that, people prefer to share their wins. You don't see too many people sharing their losses on Facebook, and the reality is, it's hard. It's not plain sailing.
No, it is really tough. And again, I'm probably really old-fashioned because the HMOs that we do, which are really high standard, we just do with like straightforward colour schemes. We're white and grey, really boring, white ceilings, white walls, white woodwork, grey carpets, and then we'll put the pops of colour in all of the dressing. Because then if somebody hates red, for example, and you've just got a red throw, red cushions, and they can remove that. They're still going to take that room.
Nice. Yeah, nice.
But if you've got a feature wall that's red,
It's not too easy to change, is it?
are they then going to take the room? So I think I probably am one of these people that I'm not into all of these like brightly coloured houses, because again, I think the other thing is, how easy is it to maintain them? When you've got a change of tenants which you're going to have, are you then keeping pots of paint at the house for all the different shades and all the different colours? I mean, I saw a great house that was on Facebook over the weekend where they'd painted all of the door frames different colours.
Yeah, I've seen something like that before.
Yeah, so it's like every time then that gets chipped, how are you, so I just think about things in much more sort of like long-term maintenance and the practicalities. It's great, these houses can look really, really pretty to begin with, but what are they like when you get in 12, 18 months down track and you might be on to your 3rd tenant moving into a room?
Yeah, your third pot of paint.
Yeah, exactly.
And if you didn't know the actual code of the paint as well, the colour code, and you're like, oh, was it that one or that one? And then you're stuck.
Yeah, exactly. And that's why I'm so pleased now that we've gone away from magnolia and brown, because there were so many different shades of magnolia. There's only one shade of white. It's like really simple. You can go and buy white.
Yeah, perfect. So anyone looking to start in property, and if you were to give any piece of advice to anyone who's looking to get a start in property, didn't know what they wanted to do, but what would you advise them? I suppose, what would you advise them just to kind of
exactly what we talked about.
Just getting out there and talking with people and
don't, whatever you do, spend your little pot of money that you've got, that you've saved up, on property education, and then leave yourself with no money. Because you need money, regardless of what anybody tells you, you are going to need money. So do all the stuff that isn't going to cost you very much to begin with. So the reading, the going to network meetings, the listening to podcasts, talking to people, all that stuff that doesn't cost you, and then hopefully that's going to help you clarify which business model in terms of property is going to suit you best. And I think the other thing that is really critical for anybody starting off in property is that you really understand numbers, so you can work out, is a deal or is it a deal in somebody else's eyes because they're selling it to you and you're going to pay them a fee for it. You need really to be able to break everything down, so you know in your own mind, if you are using somebody else to go and find deals, that is a deal in your eyes because you've done all of the work.
Me and Joe have looked at a couple of times, like trying to do when we've been like pricing deals and looking at projects, like a 3-bed house into sort of like a 4-bed mini-mo, so we like pull money back out, and then we'd have cash flow off it as well, and we just self-manage. But now that you've touched on social housing, if me and Joe wanted to do something like that, what advice would you give?
Come to my course on the 29th of January, but which is literally, it's an afternoon seminar. I've already run 2 of them. You'll get people that will give you feedback. We had 100 people at the first one, and we had 80 people on Saturday. But joking aside,
Should we go?
Yeah, you'd be really welcome
When
to.
is it? What's the
29th
date?
of January, it's a Wednesday.
Is it
In
here?
Birmingham. Yeah, I don't go out of Birmingham unless I come to Liverpool. Yeah, I mean, if you're looking to get into social housing, one, you need to understand how it works. I do it in a very, very simple way because I don't want to be managing their tenants.
Okay.
Standard tenants that are working in HMOs are a big enough headache.
Yeah.
95% of them are great, but then you're always going to have that little 5% that's difficult.
Yeah. It's always going to happen, isn't it?
Yeah. And it's all part of being in business. In social housing, with the tenant type that they have, because generally they're going to be people who are homeless, and they are people then that are going to have challenges, you're probably going to say that 95% of them are awkward and difficult and hard, and 5% of them are great. So it's like a totally the way. So I've got absolutely no interest whatsoever in managing that tenant type.
Okay.
So we do it in a very, very simple way, which is that we have a lease between the social housing provider and the investor that owns the property, and they get the rent paid. And then the social housing provider pays all the bills and everything else. So you would take your property. There's a specification laid down as to exactly what they want. Now, I'm talking about Birmingham because the social housing providers are all here in Birmingham. I've negotiated fully repairing leases. We've negotiated high weekly rentals because we're giving them a property which is like a brand new property. It's completely HMO compliant, and literally from day one of them signing the lease, they could move tenants into the property. If you want to do it in your area, you're going to have to put in the hard work and the slog, and there isn't any easy way around it of finding the social housing providers in your area that do this, and then build relationships. There aren't any shortcuts. There isn't any way that you can do it any other way other than probably doing the Google searches, finding the potential companies that you might want to work with, and getting on the phone and ringing them to see if they've got a need and that they would work with you.
Okay, could you, if somebody new was getting started out, would they tend to maybe have a bit of a void period while they were trying to get that started, or would you recommend to do that part first to get the ball rolling?
I'd probably do it first, so that if you're buying a property all the way through while it's going through conveyancing, I would probably want to be trying to find who it is then that would be likely that might be able to take it. Because then as soon as you actually own the property, you will have already been talking to that company to find out what their specification is. So it's almost like then you've got an end user before you've bought the property.
Before,
Otherwise, you need to have bought a property where you know that you've got 2 or 3 exits. I think that's what I always look at. So the properties that we're sourcing for investors to use for social housing, we're looking at buying them in areas where there is still rental demand for family property. So it could either be sold to a family, it could be rented to a family, it could be sold to another investor. So if for any reason that house that we've chosen to use for social housing isn't going to work, we've then got other exits. And I think that that's really important, whether it's you're looking at a house that you think that you want to use for social housing or just any property that you're buying, you need to make sure that you've got more than one exit.
Could you, one of them properties, say if it was a 3-bed into a 4-bed for social housing, could you easily convert that back into a single let?
You're not going to do anything different with it.
Just keep it as it is?
Because probably the house that you're going to find will be a terraced property with 2 reception rooms and 3 bedrooms upstairs. So you're not making any significant changes to that property. That's the beauty of this as a model. If you go to the next level up where you're going to have a 5 or a 6 bedroom property, the only difference that you need to do is it needs to have 2 bathrooms. But again, except for the fact that you've made it completely HMO compliant, so you'd have your emergency lighting in it, you could still rent that house out to a family.
You could,
Because it's still a house.
Yeah.
So you're not doing anything significant to make it massively different.
No, it makes sense, right? And something we were talking about as well, if we're doing the buy, refurbish and refinance model, if it didn't refinance at the value that we wanted it to refinance at,
Yeah.
we still work it out as a single let and it'll still cash flow okay and cover costs.
Yes,
Yeah.
Pay the investor
absolutely.
back and then, yeah.
Yeah,
amazing.
potentially. So again, I think it's if you're using buy, refurb, refinance, I think you've just got to be really coming back to the numbers.
Yeah, it's hard to find a deal that
Yeah.
completely stacks up. Definitely.
Yeah,
We
absolutely.
find that every day we're looking at stuff all the time, you know.
Yeah, it is very, very difficult. I think so. In the time we've been I've got a sourcing company. We've been running it for about 2.5 years.
Yeah.
Most of the properties that we've sourced have been for the big 5-6 bed all ensuite HMOs, but we've done quite a number now of houses that are used for social housing. Very, very few of those are going to get money back out.
Okay.
There's always going to be money left in the deal.
If an investor did like a 6-bed all ensuite HMO, could they then use that with social housing, take that on as well?
They would do, but the cash flow from it probably wouldn't be as good
As if it was
as if it was
let
let. Yes, yeah,
Okay.
yeah.
But they'd still be able to do it.
Yeah,
A backup plan, their plan B essentially.
Yeah, definitely. So I have got some investors that are now coming to us that have got HMOs that are all ensuite,
Yeah.
but they're in an area of Birmingham where we really have reached that saturation point.
Yeah.
So even though they've got the nicer HMOs and they've got them all ensuite, they are coming to me to say, if I lease this to a social housing provider, how much would they pay me?
Yeah.
And then I haven't got to pay the bills, I haven't got to worry about voids. So although then they're taking probably a lower profit element, they've actually got certainty
Yeah,
because they
that's
know
major.
absolutely every single month exactly how much money they're going to be paid.
Yeah.
Yeah, no, it makes sense, right? It's that guaranteed kind of thing that's coming in every single month. You know, they can work their numbers on that. Plus, having the bills all paid for is a major one as well.
Oh, yeah.
And I think as well it allows you to plan, because I think if you've got a 5 or a 6 bed HMO and you can in your head have thought, right, okay, when I've worked out my numbers I might look at having 48 weeks of occupancy across all 6 rooms, but the reality might be you might only have 40 weeks of occupancy across all 6 rooms.
Yeah.
And that hits that bottom line massively. And then it makes it really difficult, I think, to plan.
Yeah, because your time is so consumed in that trying to fill in rooms,
Yeah.
whereas that time that's employed on trying to do that could have been employed on
Exactly,
something
yeah.
else.
So instead of, these are just numbers that I'm making up, they're not the actual numbers. So it could be for that sort of like big HMO, you might be thinking that after you've paid all of your bills, before your mortgage, it might be cash flowing £1,800 a month. But the reality of it, some months you might only get £1,200. Whereas actually, if you knew, if you'd leased that property for social housing, every single month you were going to get £1,500,
Yeah.
you can plan.
Yeah.
Because-
Guaranteed, you know it's coming in, don't you?
Yes.
Peace of mind.
Yeah, and I think that's where the difference is. And I think different things suit different people.
Yeah.
The difficulties with social housing is the lending is more difficult.
Okay.
There are far, far fewer lenders that have got an appetite to
Okay.
lend for properties that are going to be used for social housing.
Interesting.
And as a new investor, if you haven't got any landlord experience, your
Yeah.
rates are going to be really high.
Okay.
So you might be paying 7% interest rates to get that mortgage, but you can still do it.
Okay.
So it just really depends. There's so much that you need to take into account, and it all comes back to numbers. And I know I'm really
Yeah,
boring
yeah.
when I just talk about numbers, but it's like everything to do with property. I think you've really, really got to understand what the numbers are.
Yeah.
So one of the brokers that I work with, when we look at this, for a new investor that wanted to get into social housing because they wanted that certainty, we almost put in place like a 3-step process,
Yeah.
which was buy the property and use it for 12 months as a buy-to-let,
Okay.
Get
And
the
do
landlord
it with-
experience.
get the landlord
Okay.
experience, buy it on a mortgage where there's no early repayment charges,
Yeah.
get your 12 months experience. Once that tenant moves out, which has just had the house as a normal buy-to-let, step 2 is make the house HMO compliant at that stage because you've had some cash flow,
Yeah.
and remortgage onto a mortgage that is suitable for social housing.
Okay, yeah.
Okay.
Yeah, it's very good. It's simple and it's just sort of effective
yeah.
as well, you know.
Yeah, but that's just taking a bigger picture view.
Yeah.
But it could be that they might say, well, actually, because I know I'm going to get extra cash flow by doing it as social housing, I'm going to take it on a mortgage with a higher interest rate
Yeah.
because I still make more money.
Yeah, you still make. What do you tend to normally get per room, or does it differ on that area?
All areas differ, yeah.
Is it,
So,
yeah.
so working with Birmingham City Council, we get different rates, for example, to what Walsall Council would pay.
Okay.
So if you're doing this around the country, the rates are going to be very, very different around the country, yes.
And what would some of the challenges be with dealing with the council? Would there be any major challenges to stick out?
I never deal with the council.
No?
This isn't anything
so-
where you right.
It's
In my
socialising,
in my experience, I've never done it, but I've had landlords who have. They have rented their property direct to the council,
Okay.
and the properties have come back in absolute dire condition.
Have they? Okay.
Yeah, when they've taken the properties back. So I would
So it's
never.
just agencies you use.
Yep. So we work with social housing providers or housing
Agencies.
associations.
Okay,
Yes.
okay.
Okay.
And then within the lease that we're signing, it's fully repairing, and they give the property back in the same condition that they took it on.
I've heard somebody say that you get the property returned in the same condition when you're letting it to the council, but it's not, is it? They've obviously been confused some way.
They
and they're
could
probably-
be.
That's
I
right.
mean, the council could say that,
Yeah.
but in my experience, it hasn't happened.
Okay.
So
okay.
I don't know what the reality is, and whether
Yeah.
or not there are some councils
That will offer that.
that do it properly and do give the property back in good condition. In my experience, that hasn't happened.
Okay. Okay.
PIP, the PIP.
Yeah,
Oh, yeah,
part-
the-
partners. Yeah,
Partners in
yeah.
property.
partners in property.
Yeah.
Yeah,
Yeah.
which is that's my little baby.
Yeah.
That's what I just absolutely love.
Tell us all about it.
So set it up with Adam Lawrence.
Who's Adam?
Adam Lawrence is my business partner
Yeah.
in Partners in Property. We met through networking, bizarrely. We just happened to be in sort of like the same circles,
Yeah.
and then were given an opportunity to take over a network meeting which really wasn't working very successfully.
Okay.
And sort of like prior to that, Adam and I had been at a meeting, and we must have been looked so rude to everybody else because we literally stood like this, talking for about 2.5 hours about loads of different stuff, but we actually thought we've got the same values
Yeah.
and we're coming from the same position with what we want to do. We do very different things in property. I am slow and steady, built my portfolio, run out of money.
Yeah.
Adam is 100 miles an hour, has probably bought in excess of 300 properties in the last 4 years.
Really? Yeah. Wow.
Yeah.
That's
So,
some going that.
yeah, really, really different. But anyway, our values are the same and our values are aligned.
Yeah.
So we decided that what we wanted to do was to set up something different, which was going to be a daytime property meeting for full-time property investors.
Yeah.
Because what I always found when I went to network meetings, I was the most experienced person in the room,
Okay.
which is great for everybody else.
Not
It's
so
not
for
brilliant
you,
for
yeah.
me, no. So I would always learn something, because I think when you listen to a speaker, there's always going to be stuff that you can learn.
Yeah.
So we wanted something different where it was for full-time property people that are all doing stuff in property.
Yeah.
Yeah.
They're not dreaming about doing stuff in property. They're the
taking
actual
action, yeah.
doers,
Yeah.
the people that have taken action. And so we set it up to begin with in September 2017.
Mhm.
And it's just snowballed from there. So we started off just in Birmingham. Our first meeting, I think we had about 50 people, and it just looked like snowballed. Then one of my friends who does HMOs in Taunton and Bridgewater and lives down in the southwest, she was like, oh, I wish there was something that we could do down here, because I'm quite lonely, because sort of like my friends don't really get property, and I think we can all be in that situation that your friends don't really understand why
Yeah.
you're doing it. So she and I just had a coffee meet-up, and from that meet-up people went, yeah, we'd love to have Partners in Property down here. So we set up Partners in Property in Bridgewater,
Nice.
January of this year.
Nice.
And then we thought we've really got to go into London, so we started in London in June, and we've got absolutely fantastic host in London, Piotr Rizanek, and he's an auction specialist. So we all specialise in sort of like slightly different things,
Yeah.
which is good. So London now, we probably have 60 to 100 people at every meeting.
Nice.
Birmingham, we're getting between 60 and 70. And the Bridgewater meeting, we've recently, in the last 3 months, moved into Bristol.
Okay.
So our 3 venues now, or 3 locations, are London, Birmingham and Bristol. And Bristol, we're just building momentum. We're getting about 30 to 40 people there. But we do it very, very differently. 1, it's a daytime meeting.
Yeah.
2, we have 2 speakers. We provide lunch that is included in the cost that you pay. And in the afternoon, we do roundtable masterminding, where each table is hosted by an expert.
Nice.
Oh, that's brilliant.
Yeah.
And then we do sort of like 3 turnarounds.
Okay.
So we'll have about 6 mastermind tables, and we spend about 35 minutes, and then we'll say to people, you can move on now to the next table if you want to, or you can stay.
Very good study.
When we first started, we just did 1 long mastermind session, and people, I think, are so polite that you could see them sitting there with half an ear on another table because they wanted to hear what was going on over there, but they were too polite to want to move from this table and the host on this table. So that's why we took control of it a little bit and just said, right, okay, if we have 3 separate sessions and we give people permission to move, nobody feels that they're just stuck in one place. And then we've got a separate WhatsApp group for each location, and we've got a secret Facebook group. So what we're trying to do is to build community. It's not about the meeting. It's about the fact that people can communicate with each other in between meetings. So people put questions out. There was one last week in the Birmingham group. I need a gas engineer urgently. Can anyone recommend anyone? So it's all about building that sort of like friendship between the people, and that if you're a new person just starting out and you want to be in an environment that's safe, that's only going to cost you £50 a month, and you're that serious that you're going to take a day off work a month so that you can come and learn, it's a great environment to be in, and we're really proud of it.
No, sounds brilliant. Sounds like there's a lot of learning to be had, definitely.
Yeah, absolutely. And you
networking
you need to come to one of our meetings just to
we
see.
will.
We will, definitely,
And we've got plans for next year as well, so we're really sort of like quite excited about where 2020 is going to take us. Yeah,
That is brilliant.
yeah, so
That's
it's all
great.
good.
Perfect. So where can people, if they want to get in contact with you, where will they be able to reach out to find you?
On Facebook. I live my life on Facebook. I'm on LinkedIn. I've got a Facebook group because I've almost maxed out my friends limit on Facebook, so it's really hard for me to sort of like accept new friends because I'm about 3 people short of 5,000. So I know it's going to go over very shortly. So if people want to join me through sort of like the Sue Sims property community, I put lots of content into that. More than happy to contact me that way. Or if people want to phone me, I'm happy for people to do that, or to send me email. However people want to contact me, really.
Okay.
Perfect.
That's good. Sounds great. Thanks very much for being here now.
My pleasure. Thank you for coming from Liverpool all the way down to talk to me. I'm really delighted.
Yeah, no worries. We'll definitely have to go to the meetup the next time, so we will.
Brilliant.
New year.
Excellent.
So, perfect.
Good
Thanks
to see
very
you.
much. Cheers.
All right, thank
Thanks.
you.
See you.
We talk about property, business, and everything in between. Hosted by Jack Heskin-Taylor and Joe McCarthy. Sharing the stories of entrepreneurs, property investors, and our journey to health, wealth, and happiness.